Western CPE is keeping you in the know this tax season with our federal and California tax update program. Whether you choose to attend a live update, a convenient webcast, or take a self-study course, we have the format that works for you. Join us now for advising your client on buying a business car.
Hi, I'm Sharon Brosi, and I am delighted to be here today with Sharon Kreider, my good friend and my teaching partner. Sharon spent 5 years with the Internal Revenue Service before entering private practice. Today, she does tax planning and tax consultation for small businesses and their owners. In addition to that, Sharon is a featured speaker for Western CPE's 2-day Federal California Tax Update live seminars. In addition to the teaching that she does in California, she also writes e-tax alerts, she does various webcasts, and she also teaches live at a variety of different conferences around the country. I want to focus on the fact that she is also my traveling partner and teaching partner in the 2-day Federal California Update. We spend November, December, and January traveling 14 cities in California doing this 2-day update. A lot of that travel is spent riding around in my car from one location to another. That leads me to a question, Sharon. I'm thinking about buying a new car that I might be able to use in my business. Is now a good time to buy a new business automobile, and what do I need to know about that?
I don't know if it's a good time. You know, you're thinking about a Chevy, so that'd be really good for GM if you bought a new car. It might help the economy if somebody would buy a new car. The tax deductions for a car are limited, and it's an annoyance to the clients. It was while we were on the road that my associate at the office called and said, your client just left a message. She needs to know what the depreciation write-off will be for, in this case, it was the 2010 tax year, because she bought a new 2008 Mercedes.
A new 2008 Mercedes.
Now, you and I know that that is not a new car. So off the top of my head, I said to Ellis, she can write off $3,060. She said, how do you know that? I said, because that's a used car. And really, it's $3,060 for a luxury automobile. That's the first year write-off. You know, it's always adjusted teeny bits for inflation. It might pop up as high as $3,065 in one year or another, but it's a very small amount because luxury car limits sit just a tiny bit over $15,000. A smart car costs more. Well, a smart car is a luxury automobile.
A smart car. Isn't it that little teeny tiny car that I'm pretty sure that I can fit into the overhead in an airline?
Well, not in a normal plane, but in, yeah, there are planes where that fits in the overhead, but not one you and I fly on.
Right.
So she calls about this. So I know because that's a used car that she bought. Let's say she bought it this year, and she bought a used car, one that had come off of a lease, one that had come off of a rental car company. We know that's used. Her limitation is her business percentage times $3,060. If it's a brand new car that she bought or that you're buying, then we have bonus depreciation. And bonus depreciation is for 2011, 100% of the cost of the car, limited to $8,000.
Oh, come on.
So that means that the most depreciation she can have is $11,060 if she buys a car, if you buy a car in 2011, times your business percentage. And by the way, that business percentage is really not 100%. No matter you're whining and begging and, oh, I only drive for business. No, you don't. So it's not 100%. Although I do tell this story regularly, and in case you don't have it memorized, I took a client in for an office audit. We're in, and I know lots of people argue about taking the client in, but I was having a hard time keeping a straight face on some of the things that are there. And he's a salesman, and he's really good at his job. So we go in, and we've gone through all sorts of business expenses on the Schedule C. We finally get to the automobile, and the examiner says, how did you get 90% business use on your automobile? How did you determine that? And he said, well, she wouldn't let me claim 100%. Now, That sounds like the joke. The joke is the examiner said, okay, and went on.
I love it.
So I'm thinking about hiring this client out.
Absolutely.
You know? That's it. So we know the client does not use his car 100% for business. We argue, talk, cajole, work on that with our clients regularly. So I know that the maximum depreciation for your brand new automobile in 2011 is $11,060. That's the most it's going to be for year one. And then there's a chart that takes you a whole long time to write off a Chevrolet. Let's see, what's that cost? $40,000, $50,000.
That would be my new Chevy Camaro convertible.
Z28 is what you want. So, because we're going to both drive the same car. That's
Absolutely.
what we're really going to do. We just want to drive that same car. So that means that you're going to be limited. It's going to take you as long to write off your automobile for business as it takes to write off a rental house. It's just going to take a really long time. But there's an alternative.
Really?
If you don't want a small car, but what you really want is an SUV, or you could see yourself with a Cadillac Escalade. Now, a Cadillac Escalade is built on a light truck chassis, so it's a rule that was about trucks, but SUVs qualify for as long as they weigh more than 6,000 pounds gross vehicle weight. This is no surprise to us. We've been dealing with this for a long time, that the luxury car rules do not apply to trucks, and that an SUV is a truck. So that's the Denali, the Yukon, the Explorer, the Escalade, the Greyhound bus, all these great big gas-guzzling creatures. But we have a variation on a problem for 2011 for something, let's say in 11 before the end of the year, that if you decided you wanted a Cadillac Escalade, bonus depreciation is 100%.
Oh.
What would that mean? You could write it all off.
If I spend $60,000 to buy a Cadillac Escalade, the luxury auto limitation doesn't apply to me, and I can write the whole amount off because it's a brand new car.
Correct. It's a brand new truck.
It's a brand new truck.
So you buy a car for $60,000, you get an $11,000 write-off. You buy an SUV, and that weighs enough, that qualifies, and you write off the whole $60,000.
I'm having trouble getting the money together, though, and it's getting close to the end of the year. What if I wait until 2012 to buy that Cadillac Escalade? Do I still get to deduct the full $60,000?
And not right now, because as of the time we're filming this, the 100% bonus depreciation expires at the end of the year and drops back down to 50% bonus depreciation. But you wouldn't do so bad even on 50%, because you can write off Section 179 depreciation on that SUV to $25,000, and then the balance you could take bonus depreciation regardless of our number, the 100%, the 50% number. Now, I believe as in recession times, the economy's not doing very well, that we're going to look at 100% depreciation as an extension. Now, that's just me using my crystal ball, but I think that the economy is not doing so well at the moment, and we may be in that circumstance. But let's just say that right now, buying the SUV in 11, write it all off. I mean, boy, what a write-off. It appears that Congress didn't notice that the big SUVs really, really use a lot of gasoline. So out of one corner of Congress, the congressional mouth, they say, take a big write-off for this big vehicle. And the other part of the congressional mouth, they say we have to be independent, oil independent, energy independent. Greener. So we have a little clash on what happened. I think perhaps the 100% bonus depreciation on this SUV was a mistake. It may indeed, as a provision, not last. But there's a catch to 100% bonus depreciation anyway, Karen. You go out and you buy the Escalade, and let me just say it's 100% business. I can hardly get that out of my mouth, but let's just say so. You buy that $60,000 vehicle, you write off $60,000 of bonus depreciation. What's your basis in it when you sell it? You can't afford the gas next year. Your clients don't like you driving a big vehicle and you go buy a Prius. What's going to happen when you sell that SUV, you have a zero basis, and that means that every single amount of dollars that you receive for the sales price is ordinary income to you at your ordinary rate. So careful, this isn't a free lunch. This is just allowing, and I like to use this as an example for the clients. If you spend $60,000 buying something, it isn't that the government gives you more than $60,000 as a write-off. It just gives it to you in different timing. So what you've done is write off the whole amount up front. With a luxury automobile, oh my gosh, it takes you so long to get all the write-off, but it's still no more than the $60,000. And when you sell a vehicle, you do have to report it to the extent that it's been a business asset as a sale of a business asset, and that's going to cost you a little bit of money.
Got it. Okay, so now I think I understand what I can deduct on my business use of my automobile. But I think there's some expenses ongoing besides that kind of depreciation that I also can deduct for my business use of automobile. But I heard somewhere that the IRS requires that I keep records.
Oh, they so require that you keep records. So you can write off the depreciation on this vehicle. This is going to be called actual expense. You wouldn't write off standard mileage rate because even at 55.5 cents, your car is costing you, vehicle is costing you a lot more than that. And especially it's costing more when we can have all of this extra depreciation. So you're going to take actual expenses on your on your vehicle, on your SUV, on your vehicle. And that means that you're going to keep track of gasoline, so you better have a gasoline credit card or some way to keep track of that gas. You're going to be able to include gasoline, insurance, so you want to sort out your car insurance. And I can't tell you how many times I talk to a client and say, what's your car insurance on this business car? And they say, oh, I don't know. I pay a monthly amount for the 5 cars in my family. So go find out when that bill comes in how much belongs to this particular business vehicle. You can write off the DMV as part of it, the oil and the oil changes and normal maintenance, the tires, the repairs. All of that is part of the actual expense. You and I know that, and we all are aware of that. The cases this year, the cases every year, the court cases, are about record keeping. That because an automobile is listed property, and listed property is an asset that's used for both business and personal, the record keeping rules are very specific, very detailed, and I must have a logbook. Now, I know you want to tell me that you had an audit yesterday, and the agent let you have the automobile without a logbook. That happens. On occasion, you get somebody who is reasonable. You get somebody who's focused on something else. You get somebody who just simply doesn't ask. That's like robbing the bank and getting away with it. Because the rule is don't rob the bank. And if the rule is don't rob the bank in the equivalency for vehicle records, it says that you must have a logbook. And if you don't have the logbook, the courts have said you get zero deduction. Sometimes the judge is better than another judge. But we've had a series of cases that said that your Excel spreadsheet that you made for the audit isn't good enough, that making a guesstimate isn't good enough, that you have to have a logbook, and that logbook has to include beginning mileage and ending mileage for the year. It also has to include what you actually drive for the day or the week. The only relief here is that if you do the same kind of business driving regularly, then the regulations say that you can keep a sample. And that sample is normally a 3-month period of time. But you have to have a logbook in order to claim your records, in order to claim your automobile expense.
Okay, so with all of that said then, what's your best idea for deducting a business automobile?
Well, let's start with record keeping. Make sure that your client knows to keep their appointment book. If they will just keep their appointment book, and that's electronic now, and maybe that's storing their electronic appointment book wherever in your cloud, you store it in your cloud, or you print it off and stick it in your paper file so that you can later store it someplace. Print off your appointment book, because that will be the basis of a logbook if you don't have miniature bookkeepers following you around writing down everything. So that's number one. Be sure to tell the client that. And then I think you are realistic with the client that, hey, you buy a car and the write-off is very, very small. Do not buy a car because of tax. Buy a car because you need a car. Don't buy it for any other reason. If you need an SUV, buy an SUV for all means. You know, sure, buy an SUV. But if you don't need one, let's try to get this into, it needs to be the right decision. I'm buying the car because it's time to buy a car. I'm buying the car because this is the right car for me to drive for business, and the right car for my customers or clients to see me in. All of those considerations are much more important than the tax deduction on a luxury automobile.
Perfect. Okay, great. That's very informative from a perspective of business deductions, certain kinds of business deductions, and what the update is on what the tax courts are saying in that regard. What we'll also remind you about is that you can hear Sharon do some additional information about what's new in all areas of business income tax deductions during our 2-day federal and California tax update, coming to 14 cities near you in California in November, December, and January. We'll look forward to seeing you at one of those seminars live, and we thank you very much for being with us here today. Thank you.
That's Western CPE's Federal and California Tax Update, with 14 live locations throughout Northern and Southern California. If you can't travel, we offer convenient webcasts featuring our brand new 8-credit condensed version or the full 16-credit version. Webcasts offer you the viewing flexibility that works with your busy schedule. Your CPE, your way with Western CPE. Visit us online at westerncpe.com or call 800-822-4194.